Hey folks, I'm Eric Lonsinger with Ford Insurance, and this is a question I hear all the time. But first, I think it's important to share my background. Prior to working in insurance, I spent nearly 20 years working in tech. I know how to write code, I have a solid understanding of technology and security, and I tell you this because I think many insurance agents are reluctant to discuss cyber coverage simply because they are not comfortable with the underlying fundamental concepts, meaning the technology side of it. And unfortunately, many businesses may end up going without coverage or undercovered as a result. And worst case, experience a costly loss due to, frankly, preventable situations. Okay, with that out of the way, let's talk about who needs cyber insurance. The easy, short answer is just about every business should have at least some level of cyber coverage. The tougher question is, which coverages are right for your business and how much makes sense? But let's start at the beginning. Do you need cyber insurance? Let's do a quick test. Ask yourself the following questions. Does your business handle or store sensitive information such as payment data or customer names and addresses? Do you have customers that access any of your systems in any capacity, like for example, logging into your website? Does your business rely on computers or applications to run your day-to-day operations? And would your ability to do business be impacted if those computers or apps went offline? If the answer to any of those questions is yes, then yeah, you should look into cyber insurance. But let's dig into it a little bit. First, when I ask people if their business handles or stores sensitive data, they often say, well, yeah, we don't store it. It's done through our, and you can fill in the blank here, payment processor, online marketplace, CRM, whatever. Many people believe that since they are paying for or using a third-party service, then that service provider is the one who takes on all the responsibility. Unfortunately, that's rarely the case. What most people don't realize is that more often than not, those companies have language in their contracts, license agreements, or terms and conditions that limit their liability for your customers' data. Seriously, go pull one up and read it. I'll wait. While they are technically storing the data and control the security guarding that data, if they end up getting hacked and that data goes public, the responsibility to respond may fall on you. Trust me when I say that can be a rude awakening. Now let's talk about the basic forms of cyber coverage to give you an understanding of what's available. You can typically get coverage in two ways. First is through an endorsement, which is essentially an add-on to an existing policy, like maybe a business owner's policy you already have. They're generally very easy to add, and the additional premium tends to be extremely affordable. However, these endorsements typically provide less coverage and at much lower limits than a standalone policy would offer. Now, that may be perfectly adequate for your business, but the only way to know is to really dig into the details with your agent and make sure all your bases are covered. The other option is that standalone policy. These tend to offer broader coverage and greater flexibility to fit a business's specific needs, and as you guessed it, tend to cost a little bit more than an endorsement, but for good reasons. You get a lot more coverage. Within either type of policy, you will generally see the same types of coverage, but the details and limits may vary. There are four common types of coverages you may run into while shopping cyber insurance: first party, third party liability, cybercrime, and business interruption. Just about every policy and endorsement out there includes some level of first party and third party coverage, with crime and business interruption usually being optional. So let's quickly review each type. First party coverage, simply put, are the damages and costs you as a business incur as a result of a cyber incident. Most policies extend coverage to address breach response, mitigation, notification, and restoration. They provide access to and payment for the technical and legal experts needed to assess and respond to the breach and coordinate the efforts to repair and restore your environment, along with the costs to notify impacted parties. Cyber extortion is also typically covered here. Commonly referred to as ransomware, this is when a hacker locks you out of your files or systems and demands you pay a ransom to get them back. Unfortunately, one study found that only 52% of victims who paid cyber ransoms were actually able to recover their files. Which brings me to an important point. Many cyber insurance providers will also include additional resources to help your business assess and strengthen your security posture. It varies from company to company, but there are some great options out there. After all, security isn't something you buy, it's something you do. If you're interested to learn about a few simple steps you can take to begin securing your business, check out my article linked in the description below. Moving on, third-party liability addresses claims that arise from the unauthorized access to data or even the alleged access to that data, along with regulatory requirements that may result. Let's pause for a second on this one. It's important. If you were sued for allegedly failing to safeguard data, there's a few important points. First, Even if the allegation is baseless, meaning you didn't get hacked but are simply being blamed for it, a good cyber policy will pay for your legal defense. This is a true but often overlooked fact for many liability policies. Second, if you are found liable for damages, for example, someone lost a lot of money and says it's because you failed to safeguard their information, then this is where a cyber policy can be worth its weight in gold. Now for the optional coverages. Cybercrime. Cybercrime typically covers things like social engineering when somebody tricks you into transferring the money, or funds transfer fraud when a hacker accesses your systems and transfers money out to themselves. But many policies offer additional coverages such as vendor and client payment fraud. So this is when a hacker instructs your customer to send them money while posing as you, and then you're out that payment as a result. There's more to it, but that's the short version. Business interruption helps replace income when you are unable to operate your business if your systems are down from a cyber incident. Some insurers will even extend coverage for more general outages, which do not necessarily need to be the result of a cyber hack. There's another interesting coverage here called dependent business interruption, which provides the same type of coverage if a business you rely on is taken down, and it impacts your ability to operate. So for example, if you sell goods through, let's say, an online marketplace, and that marketplace gets hacked and goes down, and you can't sell your goods, this coverage may kick in. If you're still with me, then thank you. I hope this helps shed a little light on the question of whether you need a cyber policy or not. In reality, we're just scratching the surface, and I'll be exploring more topics in detail over the coming weeks, so stay tuned. But if you do have any questions in the meantime, feel free to reach out or drop a comment below.